Great. It's your boy, Oarabiletalksfinance, bringing another value to you. Thank you so much to all the guys that's been liking our videos, who are subscribers. Guys, if you're not a subscriber to this channel, make sure you subscribe. You would love to be part of the Golden Ring Club. Here, we are just all about value, value, value. I don't only just talk about trading, I talk about crypto as well. Not only do I talk about crypto, I will also talk about spirituality, godliness. And not only am I going to talk about godliness, I'm also going to share some vlogs to inspire you. So why wouldn't you want to be part of something like this if you are aspiring to be very successful? I don't know. That's a question you should ask yourself. So let's dive into this, right? So this video, as you read on the title, it says how to hedge the market, right? So if you understand the concepts that I've taught you on the first video on that video that says the only Nasdaq 100 trading strategy you'll ever need, then you will of course understand how to trade by now. But now today I want to bring a new topic to you, right? Hedging, right? But I don't really call it hedging, but just for the term so that you understand. So hedging just means to eat on both sides of the market. So, or to benefit from both sides of the market. So if the market is buying, you'd eat from the buy, or you'd profit from the buy. And if the market is selling, you'd profit from the sell. Now, brokers don't like us to think in a hedging mindset. They only want us to think from a one stand point of view, which is just to buy and enjoy the buying profits, and that's it. They don't really let me put it like this: the industry, in terms of the trader side of it, they don't really promote hedging that much. But some of us, we know how to do things, and we are here to teach you. I'm giving you this for free. Imagine, So the least that you could do is to leave a like and to subscribe and to leave a comment and to share with your family and friends. That's the least that you could do. If you would like to join our group, please click on the link below of the video. Let's get started, right? So I've taught you that the market moves in a static approach of this form: highs, lows, highs. It takes out the high and it creates a new. It takes out the high and it creates a new high, and it retests back into that area where it took out the previous high, and then it obviously takes out that high again and it creates a new high. So now let's say you are here, right? Now, how do you hedge in this term, right? So now I want to do this. So now, and by the way, guys, this is a part one. I will make a part two on the chart so that you can see it on the chart. So please make sure you suck in the theory on this so that when we go on the practicality of it on the chart, it makes sense. Don't skip to the second one if you don't understand this one. So if then the market took out this high, you know that, okay, fine, I'm going to buy because here was your indication of the buy. As I've previously taught, I'm not going on this. You want to understand that, go to my first video that says the only Nasdaq trading strategy you will ever need, right? So then you understand that you obviously want the market to come back in there, and then you would, of course, you guessed that you would, of course, buy it and taking out this highs, right? Excuse my phone, guys. This is the smart. Sorry, I digressed. I just want to talk about something. This is the cool thing about the world we live in. I can do this on my phone. You don't have to do it on the laptop, on your, it doesn't, like, trading has evolved, guys. You can do it on your phone, I'm on the go, so that's why I'm doing it on the phone. If I was in the office, I would do it on the laptop, but I'm just telling you, you can do it on your phone. Just download TradingView. It will change your life, right? So if you know that the market is to drop, like I just showed you there, then it means the movement from here to there you are leaving out money on the table. That's money on the table. So hedging, basically, what I'm trying to say is you benefiting from, okay, let's use this. Hedging is you benefiting from these movements, from that movement, from this movement, and yeah, you get it. And obviously, I don't know why it removed that, but basically what I'm saying is, instead on the retests, because remember I said you can call it a retest. So hedging is basically being in the trade when it is coming back into your area. Since we know that the market will, like we know, like it's a guaranteed, we know, because it's a concept, it's static, it cannot change, it's not dynamic, it's static, it's gonna be there regardless, right? It just depends where are you looking at, in which time frame are you looking at it. Let's say, like example, right? We knew that we had a high here, so the market took out this high and it created this new high. So we know that, like with our trading concepts, we are saying that the market needs to come back into this area in order for you to take a buy trade here and obviously capitalize. But now this point from here to here, what happens? Before we used to wait that the market needs to come here, but I've come to realize that on smaller time frames, this whole concept that we are looking at, it also happens on the smaller time frames. What do I mean? Now I'll explain. Let me just explain to you how to spot these concepts in order for you to capitalize on this movement. And by the way, it's a scalp. It's not a swing. It's a scalp, but it still just falls under the concept. That is why I couldn't resist, and I've been doing this without consciously being aware that I'm intentionally doing it, right? So, if the market is here and you know that you want to take your buys here, you know this. By this time, you know that you want to take your buys here. Now the market is here. Now I'm gonna create a structure for you so that you understand, right? Let me just do this. Right. So the market on the lower time frames, by the way. Come on, who's this now? I'm working. Ugh, stupid Capitec. All right. So this high, now the market on the lower time frames, I repeat, lower time frames. The market would then, let's just use this area over here as an area of a low, right? It's a low. Remember, from here to here, you will be selling. So if you are selling, it means you are more concentrated on lows, right? Hence I said I put this here. Now let's pretend that the market did a movement like this, right? The market did that. That is now, of course, a low, right? And now if it's a low, we know that the concept says the market is always chasing a low or a high. Now, if you are selling, it means you are chasing a low. So then the market gives you this low. It then pushes back up slightly, and then it does it again. It does what? It forces itself to break this low, right? Now let me just do this and zoom in so that you can see this properly. Bear with me, guys. You understand this, don't worry. So we now know that the market created a high on the higher time frame, by the way. Then on the lower time frame, it created a low, and then it pushed a bit up, and then it broke that low on the lower time frame. Just pretend that you are looking at this at the lower time frame. Now the market broke this low, right? So then you guessed it right. It will still do the same thing that it does on the high time frame. It will come back into that area, and of course it will sell. And of course it will sell. Like it will sell, but of course you still have to apply the same concepts. Guys, apply the same concepts. You sell it there. You would obviously sell it into the area, and then you put your stops. You'll of course sell it into the area where what? Where you are planning on buying it. Do you understand? So do you get the point? So the market created a high on the higher time frame, and then on the lower time frame it creates a low. And then of course now, because you are trying to scalp, or you're trying to hedge, or you're trying to sell in buy, you then obviously go on the lower time frame. Then you look at the same concept, the same structure. Where is my low? There's your low. You know that this is your low. There's your low. The market creates a high, it comes to break that low, which is there, and then it comes back into that area. And then of course you take your sales there and you drop with the market. And when you get there, what do? You get back into your bias, which is what? To buy it. Because remember, you still knew that you are gonna buy it here. So when it gets here, you buy it. So congratulations, guys. You now understand how to hedge. Like, it's so straightforward. Like, the market does it all the time. Like this, like, okay, look at it this way. This over here is your high, right? This, of course, you can see that this over here is your high and this is your low. But this, you'd be looking at it on a higher time frame, like your 1 hour, 4 hour, 30 minutes. But this movement, this small movement, this would obviously be on your 15, 5, and 1 minutes, right? And you'd execute. Like, it's the same concept, guys. I hope it makes sense. If it doesn't make sense, please drop a comment on the comment section, and I'd love to explain this again. But I think I don't want to complicate it. Of course, if it's buying, you do it like, if let's say the overall direction in terms of the overall bias. Say you are looking at this in terms of selling, right? If it was selling, then of course you'll apply the opposite of it. So if it was selling, let me just make you an example quickly. Say it was selling, just okay, first let me do this. Let me just delete this so it doesn't confuse you. Okay, let's just say the market was selling, right? The market is selling. I hope you guys understand this. Like, man, this is not so difficult. It's really, really straightforward. Right? Let me just do this. If the market was selling, it was to break the close, right? And it would come back in there, right? And then you'd obviously sell. I really hope this makes sense. If it doesn't make sense, then I think I'll have to explain it again. But I think it makes sense. I think you get it, right? I'm just drawing you the structure. And the market will come back in there, and then you take your sales there. Then you take out this low, and then of course the same thing again. The market will come back in there, and you take your sales, right? You take your sales, you go down. Right, now now you get it. You can see this is the sell structure. But now I'm trying to show you, where would you hedge? Where would you have your buys in sales? Remember, there we're talking about if the market is buying and you would want to hedge a sell, right? Excuse me. Remember there, when the first time when I was explaining it, when I was teaching it here, I was talking about it. If it was in a buy, you'd want to sell your way into your buy trade. So here, then it would mean that you'd want to buy your way into your sell trade. Do you get it? Like, look, okay, let me explain it from here. The market created a low, right? And then it broke this low. This is obviously on your higher time frames, right? So you'd obviously say in your head, okay, I want to buy in this area to sell the market. But now, from here to here, you'll have to eat from here to there. You'd buy from here to there. And when you get there, you'll sell. You'll close all the buy trades and you'll sell from there, and then obviously do that. But obviously here, it will still be the same structure. You'll have a small, okay, let me zoom in so that it makes sense. So obviously even here, you'd have a high, because remember, you are buying. Say, let's just say for argument's sake, the high is there, right? So you'd have a high, and then the market will have to, because you are buying, the market will have to break the high, right, and retest the high, and then once the market comes in there, you would do what? You would buy it. You would buy it. You'd buy your way into there. And then of course once the market gets into this area, because you would have bought your way into the area, once the market gets here, you'd obviously close all the buy trades here, and then you'll open sell trades and you'll go down with it. I hope this makes sense, guys. If it doesn't make sense, please make sure just to leave a comment. I'll attend to you. I would, or just join my group and ask me in the group, and maybe I'll make sense out of it. If it makes sense, then good for you. You are very, very, very blessed to understand it. If it doesn't, I'm here for you guys. Guys, that's it for me. I just wanted to break down this very, very interesting topic, hedging the market, or like I always say, buys in sales or sales in buys. Yeah, guys, that's it for me. Please make sure that you stay tuned for part 2, where we do a practical on the actual chart. Yeah, that's it for me, guys. Go ahead.